Now, right here, the Aussie has been respecting it's one of the best currencies, specifically because it is one of the currencies that pays interest. It is one of the currencies that highly respects its structural points and its significant points, simply because there is a lot of people that are actually following this currency and trying to take advantage of what this currency offers with regards to interest rate. And the key structure point is the 98.45, and then below that there is the other structure, which is the 96.64. If you look at the historical chart, you could see that the 98.45 was the peak of the bull market that ended in 2008, and the Australian dollar capitulated from 2008 below, when it traded below the 98.45. It capitulated all the way down towards the 63. It lost about 33% of its value. The second structure that held when this pattern took place was the 96.64. So last couple of weeks we did break below the 98.45. We tested the 96.64. Once it came above it, here we had this kind of a short covering that took us to the next structural point, which is the 101.82. At the 101.82, it had one of two choices. If this was a bona fide trend to the upside, it should have continued higher above the 101.82. Having failed for 3 days to go above the 101.82, then that was followed by capitulation to the downside. That indicates that the market should begin to resume its downward move. Therefore, the close that we had on Friday here is pretty much a 0 day, as you can see. Look at this candle, it's absolutely a 0 day. And so we have to look now, the bias is to the downside. We're going to look at the intraday chart and try to pinpoint our entries to the day. That is your trend, that is your 101.82, and this is these are some of the little points that when you put these structure points on your screen, on your intraday screen, the chart begins to talk to you. You see there's your New York range, and right in the middle of the New York range, right there, you see that you have your major structure point of the 101.82, and when it breaks below it here, then you have three sell signals: a trade below the structure point, a trade below the range, a trade below the market side. You have momentum, then everything is telling you go short. And once you take it short, you have your capitulation to the downside. So now the market is telling you, yes, this is what I see and this is how I'm behaving. So you're looking now, following this kind of momentum, you're looking for continuation to the downside. This is pretty much typical, and therefore the way we are going to be taking this, we're going to be shorting it right below here. So we're going to short below the 10028, so we'll just give it like 40 pips to play around. And if I do, I'm placing my stop above the 4 daily low, so my stop is going to be here. And I will see the structures from the daily chart. On the long side, really I have no reason to consider even any form of buying unless it gets above the 3-day low, which is, this will be our buying point. And if it does go above that, then my stop will be this is just an approximation stop, so my stop is going to be here below the 1080. So for the Aussie, we're going to buy above 100, which is actually 10120, above 10120. My stop is going to be below 10080, and my next, the structure long to the upside, is the 10182. That's what it is. On the short side, I'm going to go short below 100, which is actually the short from last week, maybe 28. And my structure short point is the same from last week, which is the 99.29. And if I go short below 102, 1080, my stop, actually, this is exactly the same short entries we had from last week. I'm just change it by 4 ticks, so I'll make it 62. So for the Aussie, we're going to go long above 101.20. If we do, we have a structure point at 101.82, and our stop is going to be 10080, so I'm risking about 40 pips on this trade. On the short side, I'm going to go short below 10028, and if I do, I have a structure short point at 99.29, and my stop is going to be the 10062. Okay, that is the Aussie dollar. Let me save that, and we are